If you're in a relationship and trying to figure out if you should be opening up a joint account with your partner or how it even works to open up a joint account, then you're in the right place. As an individual person, you likely have both a checking account and a savings account, and hopefully a high interest savings account. Now, you probably have your income deposited into your checking account, and you also pay your bills directly from that checking account too. Then your savings account is for the money that you're keeping, either for short-term expenses or for your emergency fund. That's the system that works pretty easily for an individual person, but what if you share expenses with someone else? The most obvious example would be someone that you're dating, but it could also be roommates or family members who split payments for something. Sometimes in these scenarios, people may choose to open a joint bank account. A joint bank account is very similar to a regular account. You can open either a joint checking account or a joint savings account, and the only real difference is that both people attached to the account can access it. So both people can deposit money into the account, both people can withdraw money from the account, both can write checks if it's a joint checking account specifically, or make online payments. For some people, it feels like opening up a joint bank account is the best way to split finances, and it can be useful in some situations, but there are some things you should consider before opening one up.
Okay, so we really want to kick things off by making sure that you really think about your options. Some people think of a joint account as the best solution to splitting their finances, and Steph's gonna get into the pros and cons in a second, but there are options that could be better for you depending on your specific situation. First off, Steph and I currently don't have a joint account, but we still split our household expenses 50-50. Now, how we do it is the bills are automatically paid from one of our accounts, and then the other will each transfer half that amount every few months. Now, we might have a joint account in the future, but this is just how we've been doing it for the past few years. Another option is having a joint account and also maintaining your own separate accounts. So maybe you would still have your income deposited into your individual checking accounts, but then you would transfer a specific amount of money into your joint account. So either enough to cover your portion of bills on a monthly basis, or an agreed upon amount to save every month, or potentially both. Either way, depending on what works best for you and what you land on, it's definitely important to have a conversation about this and be on the same page before jumping into any big financial decisions.
Okay, so before we dive into how to open a joint account, we need to really understand the pros and cons. One of the main benefits of a joint account is the convenience factor, which is probably the most common reason why two people would open up a joint account, because it makes it easier to make financial moves together. Like if you open up a joint checking account, you can pay your bills and track your expenses together by paying anything that you split from the joint account. So that way, instead of one person paying for a bill and the other paying them back a portion, or someone taking one bill and then the other person paying the other, it's a little easier than that. Another pro is that a joint account can help you with shared savings goals. So if you open up a joint savings account, both people can contribute money to it, and both people can see the progress being made towards whatever amount you're aiming to save up. The last pro is that by opening a joint account, it's another category for deposit protection. Now we're going to talk a little bit more about what that means later in the video, but at a high level, in Canada, for example, you get $100,000 per insured category per financial institution of coverage from CDIC for each eligible deposit. So for your individual savings account, you have $100,000 of coverage, and then once you open a joint savings account, you get another $100,000 of coverage for that category too. Now there's also some cons to opening a joint account too that are definitely important to mention. The first one is the lack of individual control and privacy that you have once you open up a joint account. Now when two people open a joint account, it means that both people can access and spend the money in the account regardless of who contributed the money. Now this is assuming that the signing authority is general, which means that both people's signatures aren't required. This basically comes down to trust, right? And even though people would typically only open up an account with someone that they trust, the reality is that sometimes things happen, and you don't want to be in a situation where you've contributed more money and the other person is draining the account. On top of that, because both people can see all of the money that's being put in and taken out, it could in theory cause arguments over every single expense. I think there's a balance here between transparency and overbearingness. Another con is when two people only have a joint account and no individual accounts. When this happens, you're putting yourself at risk of having no financial freedom and potentially losing your personal financial footprint. In our opinion, it's important to be aware of what's going on with your finances and also have the ability to make financial decisions for yourself. Your personal financial footprint is something that you've ideally been building up for years, so by solely having a joint account, it makes it more likely that one person will own the financial role and also combine the good and bad habits of two people into one. It can also be hard for either person to use their money to leave the relationship if necessary. Now, building off of that, the last con is what happens if and or when you break up. Now, this risk is specific to if you've opened up a joint account with your significant other. Now, if this happens and you break up, you'll have to close down your account, and there's the risk that your relationship doesn't end on the best of terms, which is definitely something to consider in advance.
So if you decide that a joint account is the right choice for you, whether that's with a significant other or a family member, how do you actually open an account? It's a pretty simple and straightforward process that isn't very different from opening up an individual account. Depending on the financial institution that you're opening the account with, you'll either go through the process in person or online. You'll select either a joint checking account or a joint savings account, or both if that's what you're looking for. And then you'll be asked to provide ID for both account owners. Now, there will be additional information for both account owners, just like you would for any bank account. So think your birthday, your SIN, your address, where you work, things like that. And that's pretty much it. Closing a joint account, on the other hand, is a little bit different because at that point, there's likely money in the account. And of course, there's two people involved who potentially aren't on the same page anymore. First, you need to decide how to split the money that's in the account. Now, if you've been using it to pay off bills, likely more relevant to joint checking accounts, then the money that's in the account may be small. However, if it's a savings account, you'll have more money to split, and you might want to split the money in half or divide it based on who contributed more. But remember that this is an informal process between the two of you. The financial institution won't recognize who deposited what money. Once that's sorted out, both account owners will likely need to sign a form agreeing to the closure of the joint account. The other option is to remove one person from the joint account and leave the remaining owner to have full control over the account and the money that may be left inside. They can then close the account on their own. Also, don't forget to stop any automatic withdrawals or deposits into the account once you've decided to close the account.
The last thing that's really important for you to know is if and how your money is protected within a joint account, because it is considered a separate category from the money that you hold on your own. We're happy to be working with CDIC, or the Canada Deposit Insurance Corporation, on this video. Now, if you haven't heard of them before, CDIC is a federal crown corporation that was created to insure eligible bank deposits up to $100,000 per insured category at any of their member institutions. You can find the full list on their website, but they cover over 80 different financial institutions. What's good to know is that their coverage is free and automatic. You don't have to sign up to be protected. So basically, if your bank or your federally regulated credit union fails, you don't have to do anything in order to have their protection. Again, any deposits that are co-owned, like a joint account that's in the names of 2 or more people, have separate protection from the other insured categories, like all the ones listed on the screen right now. So for example, your individual savings account is insured up to $100,000 and your joint savings account is insured up to $100,000. And remember that this is just per institution, so you can be insured for multiple accounts across different financial institutions. Also note that the coverage is up to $100,000 per set of joint owners and not per depositor. So it's $100,000 between the 2 account owners and not each. On top of that, if you have 2 joint accounts with different people, so let's say that I had one with Dennis and one with my mom, they're separately insured up to $100,000. But if I had 2 joint accounts both with Dennis at the same institution, then only one would be insured up to $100,000. Also, if any member institution does fail, CDIC will pay out eligible deposits in a joint account with the payment to the co-owners of the account together. If you have any questions about CDIC's coverage of joint accounts, let us know in the comments.
So if you want to hear more about how we split our finances, expenses, everything like that, make sure you check out this video next. And yeah, another big thank you to CDIC for working with us on this video, and we'll see you next week.